Hello and welcome to today's video. So are you looking for the best dividend paying ETF to boost your passive income through investing in the stock market? If so, then you have found the right video. Today we are going to be taking a close look at the Schwab US Dividend Equity Fund, which is of course known as SCHD. So this is an ETF, which means it is kind of a basket of stocks from the US markets that are known to pay consistent and high dividends and have some growth in there as well. So by investing in this ETF, not only are you getting a portion of some of the world's best and most valuable companies, but you're getting to do so without having to purchase individual stocks like Nvidia, Apple, Amazon, Alphabet, Meta, or even Tesla. So that allows you to diversify your fund, your portfolio with just one simple purchase. And of course, we can't ignore the huge over 4% dividend payment on a yearly basis, but paid quarterly. So let's take a closer look at the fund page here from Schwab. So as mentioned, this is an ETF, symbol is SCHD, with an expense ratio of 0.06, which is super low for an ETF. Scrolling down here a little bit, you can see that it opened at about $26.01 at the day today. But of course, the current price doesn't matter too much. You're most likely interested in what is in this fund, what are some of the actual performance values, and how much can you earn with a small to medium investment in this fund. So taking a look here at the portfolio, you can see that there are a lot of well-known large companies here in the top 10. There's a great mix of tech companies, home improvement companies, consumer companies, media and telecom, and defense companies as well. And this is just the top 10. There are, several, just over 100 companies here in the lineup of SCHD. So it doesn't seem to want to let me scroll here, but here's a closer look at the larger list of companies. So all of these companies have something in common, and that is that they pay dividends. And of course, that's going to lead us into the dividend calculation section of this video. So you might be thinking, I've got some money to invest. I want to put it somewhere where it's going to make me money passively. And of course, in the stock market, with that, you have the risk of the stock you purchase going up in value and down in value. Of course, it's not a risk if it goes up. That's usually a cause to celebrate. But if it does start to go down, you do have the risk of losing money. So that's where the ETF kind of comes in. And by having all of those companies, if one or two does poorly for a while, the others should support it in some capacity. So what we're going to go ahead and do is type in SCHD here. This will look up and pull in the information about the shares. Today it looks like it's priced around $26.42, so it was up a little bit from the price that it opened at, and it auto-filled in everything here. So basically what some of this means here is, yes, it is technically treated as an individual stock for this calculation purpose. The distribution frequency is quarterly, meaning every quarter you're going to get the dividend payment of 4.07%. The DRIP program basically means you are reinvesting those dividends into the stock, the ETF that you purchase. So it's going to go ahead and pay you those dividends and go ahead and put them right back in to get you more shares of SCHD. So we're using today's price to keep it fairly simple, and what I'm going to go ahead and do is I'm actually going to delete out the annual contribution. So we're going to approach this calculation as a one-time lump sum investment in SCHD at today's current price. What we're going to go ahead and do, tax rates are different for everybody, so I'm going to go ahead and just leave that as 0. The annual dividend yield was auto entered in when I entered in the stock. And we're going to expect an annual increase of 3%, both in share price and dividend payment. So what we're going to start off with here is the number of shares. Now, 1,000 shares is definitely a little bit of a larger investment, where if we bring up the calculator here and do 1,000 times that 26.42 price, $26,420. Now, obviously, that's a fairly large investment. So let's say you had $1,000 to start with. That is going to get you roughly 37.85 shares when you do 1,000 divided by 2642. So we're going to round up and say 38 shares. And we go ahead and calculate those dividends. So this is also going off of a 20-year portfolio time. So if you remember, we invest the $1,000 right up front, we get 38 shares, and then forget about it. You don't add anymore, you don't sell, and it just continues to reinvest. Well, after 20 years, the ending balance will just be under $4,000 with an annual average return of 7.13%, and you're earning an annual dividend income of $164.57. Now, you might be thinking that's fairly low. Well, that's where we can start to add in the annual contribution. So this is how you can start to see a bigger increase in your earnings. So if we take and say you put in $100 per month, which is an additional $1,200 a year, over that same time period, by just adding that, it jumps to $53,000, and by year 20, your annual dividend income is going to be $2,227 per year. So very, very cool. And then, of course, as you start to build up your investment portfolio, you may realize that maybe you want to start adding additional contributions. So you might get up to the $2,400 level, $200 a month. Calculating those incomes, you can see that that pretty much starts to double your dividend income and your ending balance. Now, that's super cool, but let's say you want to approach this as, I just want to earn $1,000 a month or $12,000 per year. So I'm just going to go ahead and put this back to 0. And if we go to put in that 1,000 shares again, you can see that that gets you right around the $4,000 mark. So we're basically going to need to triple that and go up to 3,000 shares. Now, of course, at today's price, that is pretty steep in terms of an initial investment, but you're going to be earning over $1,000 per month, $12,000 a year, completely passively from SCHD. Now, in addition to SCHD paying off these great annual dividends, you can see here, if I refresh the page and get rid of the pop-up, that right now SCHD is forecasted to be about $30 by the end of this year. So that is a 12-month forecast, which is really, really cool. So yeah, right now that's whoops, wrong screen, priced right around $26.42, but if you basically just assume that you invest at $26.50, round up a little bit, we take $26.50, you get those 3,000 shares for that $12,000, almost $13,000 income. We can then take the 3,000 and go ahead and just quickly multiply that by 250, which is the difference between, well, not 250, it would be 450 there. The difference between 26 and that additional $30 price difference. As you can see here, that is $13,500. And I think I did that math backwards. It should have been 350. So 3.5 times the 3,000 shares is $10,500 in just gains. So if you're interested in learning more about SCHD as a stock, feel free to let me know down in the comments below if you've got any questions about this. I know this video was a little different from the content usually uploaded here on the channel where we look at cryptocurrency, but with the way crypto markets have been and stock market, it is always good to look into different financial investment products and learn and see how these can help boost your earnings, your portfolio, and your overall net worth passively and efficiently. So thank you so much for watching. If you haven't already, consider hitting that like button, and if you want to see more videos like this, let me know down in the comments below, as I'd be interested to see if this is something that you'd like to learn more about. So thank you so much for watching. I hope you enjoyed, and I hope to see you in my next video. Bye.